Hello, salon people. Welcome back to my happy hour with Josh. It's been a long time since we've done one of these. I think I was thinking about the first one, which I think we did right in the beginning of the shutdown as it was unfolding. The world seemed like it was coming undone, and I appreciated getting an opportunity to do a series of these. Most notably, when we started these, it was to talk about some of the relief and the different stimulus bills to help salon owners and help our industry. And since a lot of that died down for a bit, I figured it was time to get back to us running our businesses. But alas, there is a new COVID relief bill and new opportunity for PPP and related items, and so I felt like it was a great time to do another happy hour. But I welcome everyone as you're coming in. I have a great regret and forewarning. I hope I don't disappoint many of you out there, but I am in fact drinking tea. Brian, I'm sure I'm most notably going to disappoint you, but it is like dry January. You know how New Year's resolutions, everything. A lot of you know how that goes. So my nice hot cup of tea. Hopefully you guys have poured yourself something, whatever it is, and are relaxing, ready to dive into it. So first disclaimer, and I've taken a few of these webinars and seminars relating to this, and I think they all start the same way. So I feel compelled to do the same thing with you guys, which is anything I say is just my opinion and advice. I wouldn't take it as legal advice. And I think a couple of things. Number one, of course, I'm not an accountant. I am merely a shampoo salesman, for lack of a better term, and a hair industry person just like you guys. But I have spent a lot of time researching what's going on, and I think I have some tidbits to share with you. But most importantly, I think each of you should, if you get any ideas or thoughts relating to what I say, talk to any of your related professionals before you do anything dramatic. But you ready to buckle in? Here we go. So here is what the new the new CARES Act is all about and how it affects you. And I think there's a tremendous opportunity for our industry. So I really, really want to encourage everyone to go after what I think is there for us, because there's no question our industry was as impacted as any industry out there. So first and foremost, I want to talk about a few changes that were made in the new bill that impacted the first round of PPP, which I know a lot of you got. So let's take a sip of our drink and go. All right, here's probably the first and most important thing. Anyone that got PPP money prior was about to face a tax ramification to the money that you got from the PPP loan. So previous to this new bill, any expense and forgiveness that you were going to get for an expense covered by your PPP money was going to be treated as essentially non-tax deductible. So basically, you were going to end up having, if you were going to show a profit because of all the expenses that you used with the PPP money, you were going to end up having to pay a tax liability with that. So that has been nullified and changed as a result of this new bill. So the great news is that any expense that you use the PPP money for in the first go around is going to be deductible on your taxes. So that is great news for all of us. And that is the case in the new round as well. So that's a huge, huge benefit. And so all that forgiveness will not result in a tax ramification or a tax hit. The second thing that's a benefit that occurred from the new bill that's going to impact the first go around. Many of you may have gotten PPP money and applied for that EIDL grant, which was, if you recall, $10,000 through the EIDL program. And whether or not you got more or not, that $10,000 was basically a grant. You didn't have to pay it back. And initially, what the IRS said is that $10,000 was going to be deducted from your forgiveness if you also got a PPP loan. That has been killed. So the good news is that you're not going to take a $10,000 hit on your forgiveness if you got both. So that's great news. And also that $10,000 in and of itself is not taxable. So you're not going to get taxed as revenue for that $10,000 grant. The last thing relating that the new bill did to the old PPP, if you have not applied for forgiveness yet and you took $150,000 or less in your original loan, you are only going to have a one-page document to fill out for your forgiveness application, which is going to make it meaningfully easier for many salon owners out there. And so hopefully, if you haven't gotten your PPP forgiveness application done yet, you're in for a much easier time. Okay, so that is all for the changes to the old PPP. Now let's talk about the new one. All right, so PPP 2.0, which is not finalized, all the details aren't out yet, but it looks like they're going to start giving out these loans sometime mid-January, so in a week or so. Those loans are going to be applied to the same lenders that you went the first time around, so not the SBA directly, but your local banks. It seems like the local smaller banks were the ones that were the most aggressive and easiest to apply for these loans, so that might be where you start. But if you got one before, I would go right back to the same person you got it, the same bank you got it from last time. So the qualification this time around to get a PPP loan is that in any quarter in 2020, you had to see a 25% or more decline in your revenue. Now, unless I'm nuts, I would imagine that everyone listening to this in the second quarter of 2020 when we were shut down, because I think that was about from March to like late June, depending on where you were at. I can't imagine that doesn't mean everybody would qualify. So most every salon out there should qualify for the revenue reduction qualification. So given that case, we should all be entitled to 2.5 times, it's the same as last time, 2.5 times what your annual average monthly payroll. So basically you take the payroll for 2019, you would get 2.5 months worth of your payroll and related expenses, which is the same as last time. So healthcare expenses and things related to anything related to payroll. Okay, so here's the other thing that's new and a little different this time around. So to achieve forgiveness for this second round of PPP, you only need to put 60% or more towards payroll and related expenses. It was a little higher last time around. So you definitely need to use at least 60% of your payroll, of your new PPP loan towards those payroll and related expenses. And if you do that, you should get mostly all of it forgiven, with a couple of exceptions that we'll get into. The other nice thing is that the other 40% that you can use to other things, rent was and still is in that. They also added some things. You can use it for software. So any software costs. You can use it for key suppliers, any supplier cost that is fundamental to running your business. So all that, hopefully hair color and products you had to buy gladly from Art of Business, you can use it for that. So up to 40% can be used for rent, supplies, software. There's a couple other things, but I would think that those things alone, along with the 60% or more towards payroll and related expenses, should be a wonderful area, and you'll have no problem using it for those. Just like last time, you could choose an 8-week period, or you can go up to 24 weeks. So that's how it worked last time after they made that adjustment, and that's how it's going to work this time. And that period is for the first half of 2020. Sorry, what year are we in? 2021. So the year we're in now, moving forward. Again, like last time, or like the new change, if you borrow $150,000 or less for the new round of PPP, you're only going to have a one-page application for your forgiveness. So they're really, I think, encouraging for small businesses to try to make it easy, painless, and to have a high likelihood of gaining that forgiveness. And so I think, depending on the size of your salon, a lot of us probably, 2.5 months of payroll and related expenses might be somewhere around that 150 marker. So, if you're having to evaluate taking 150 versus 160, you might want to just do 150 so you don't have to go through a very laborious application for forgiveness. One other important note is that not to get too deep into the weeds on this, but if you recall, for forgiveness, there was a full-time equivalent, your equivalent of full-time employees, they call it FTE. If you have a difference in your full-time employee account and the hours associated with those employees, in this new cover period in 2021 versus that same quarter in 2019, so not 2020 but 2019, they would reduce possibly your forgiveness by that ratio. However, if at the end of your cover period you go back to your full FTE, that is going to be waived. So that gets a little complicated. You might want to talk to your accountant on that. But there is a potential of a slightly reduced forgiveness. But keep in mind that you might have, if you have less full-time employees, you might have less payrolls. So that your payroll costs would probably be lower anyway. So it might just be ratcheted down in that proportion. But the last part, which is somewhat important but ambiguous, is to qualify for this new round of PPP, you have to certify that the loan is necessary for the ongoing survival of your business. Now, there has been zero definition as to what that constitutes that, and depending on who you talk to, it doesn't look like there's going to be too much fighting on that. I think they put that in there for anyone that's wildly unimpacted or is making a very large profit to try to steer them away from it. I would imagine that most all salons, given how tough it's been out there and just being on the street, that I don't think anyone's going to have a hang up on that. And particularly if you're getting less than 150, I really don't see anybody having an issue. But they're going to ask you to make that certification on your application. Okay, so that is the nuts and bolts of the PPP, but there's a little more to the story that I wanted to get into, and this is where it gets a little more involved, but there is more to the CARES Act that I think is really important, the new CARES Act that's really important for our group. So take a sip of your beverage. Okay, so the next part, which is, actually, before we get to that, I want to just add a couple other things. So in addition to PPP money, which I really think is where the lion's share of all salon owners should be focusing their time in terms of getting it, and whether you got one last time or not, you can qualify for the new one. So whether you can get a second one, but if you didn't get one the first time around, you can still qualify given that you have the 25% decline in your revenue, which again, I think most everyone would. But there's other places to get capital and money in the event that you need that to survive or you need it to grow your business. And so the SBA, they put a lot more funding into the SBA and EIDL loans. And so I would just throw it out there if someone for some reason didn't qualify for the PPP or wanted to go a different route or get additional money, there is a ton of opportunity at the SBA through their EIDL program and their traditional SBA lending. That money must be paid back. It's not forgivable. However, in the new bill, they're forgiving the first 6 months of payments, which includes principal and interest. So that's certainly in a conventional situation an incredible offer to get money, to get cheap money. So that's another thing. And those loans go through the SBA directly, not through your local bank. Okay, so on to the employee retention tax credit. Now, this is a very ambiguous part of the relief bill, and it actually was in the old bill, and I don't think a lot of people understood it, and quite frankly, it's very complicated. So this is definitely an area where you're going to want to consult a professional, and I personally am struggling to understand exactly how it works, but I can tell you it's got my attention, and here's why. So in the previous bill, you were entitled to 50% of all your payroll costs, all your wages, up to $10,000 per employee in the form of a full dollar-for-dollar credit, which means $10,000 employee, 50%, so that's $5,000 per employee. You could get a credit for the wages that you paid where the pandemic started, March 12th, throughout the entire year, December 31st. So the one catch is you can't get that credit for wages that you used PPP money to cover. So if you've got forgiveness for wages, you can't use that. You can't get a credit for that. But all your other wages in that time period, you can get a 50% credit of all up to $10,000 per employee. So $5,000 per employee, which is a tremendous amount of money if you think about it. So that is something that you definitely want to talk to your accountant on how to apply for that. Now, here's the even cooler part. For the new bill, they upped that to 70%. So $10,000 per employee, 70%, which means $7,000 per full-time employee, and that's for wages between January 1st and June 30th of 2021. And once again, the only caveat to that is that if you use PPP money to cover any of those wages, those cannot be used for your credit. Now, there is a little bit more to the story in terms of who qualifies for that credit. So to qualify for that credit, you have to have either had your business. So this is in 2020. You have to have either had your business suspended by the government, which I think every salon had that happen, or down by 50%. And then you can get each quarter. You can qualify for that credit. So you can use the wages in any quarter from that moment. So for us, that would be Q2, to the point where you surpass 80% of your previous sales of that same quarter the year before. So for example, if you did not get over 80, so if you got over 80% of your Q3 2020 was more than 80% of what your Q3 2019 was, then that's the last quarter you'll be able to use for that credit. You won't be able to use the fourth quarter. But if in Q3 you did not go to 80%, then in Q4, you could use Q4's wages as part of that credit, which is a tremendous amount of money for many of you. So it's very similar in 2021. As again, it's a 70% credit, and then also the same thing goes that you can use that credit until you're over that 80% threshold. So it keeps carrying quarter for quarter throughout the calendar year into this year. So for those of you that have not yet gotten back to a 80% or higher sales threshold of those same quarters in 2019, you will be able to claim those credits throughout this entire period, minus the portions you use to cover with your PPP. Now, I know that may be complicated and confuse the heck out of a lot of you, but if nothing else, what I implore you to do is talk to your accountant and say, hey, how do I maximize my employee retention payroll credit, and if I get PPP forgiveness, how is that impacting it? And the last quirky thing about this, which is really cool, which I don't fully understand how it works because I don't think they've put out the guidance on this yet, is they say in this year, 2021, for that employee retention credit, you can ask for an advance on that credit of up to 70% of your anticipated full credit. So what does that mean in terms of getting an advance? I don't understand. I don't know. I don't know if that means you're going to get a check. I don't know if that means you're going to immediately stop paying any federal taxes that you would otherwise be paying. But the bottom line is that every one of the salons out there should be capitalizing on full forgiveness, because I can't see a reason why every one of you wouldn't be entitled to it, and juicing up that employee retention credit, because I know most every salon brought back a lot, all the stylists that they could. And so there's a ton of opportunity out there. And I know more than anything that a lot of you guys are hurting, and the industry's hurting. And so I think, again, I probably don't know all the answers to this, but other than hopefully I stimulated you guys to talk to your professionals. All right, I think that was a mouthful. Hi, Anne-Marie. Thanks for the thumbs up. I didn't see any questions come up, so I'm going to take a sip. If anybody has a question, I'll see if I can answer it. But I have thrown up on you with my presentation. I wanted to do this fast because I know our threshold for listening to this kind of stuff is short. Patty Mead, is this a credit or a refund? It is said to be a credit, but again, I guess if you advanced it, it would be almost like a pre-refund, but it is actually a credit. So if you're in need of immediate cash, the PPP is where you need to go. But if you're looking for a tremendous amount of ongoing relief, and especially if you have a tax liability that you think you're going to have to pay for 2020, you should really understand what type of credit you have coming to you. So there was a question about independent contractors. So as I understand it, independent contractors are entitled to the PPP 2.0. So you have the ability to get it. the employee retention tax credit wouldn't really apply because you are your only employee, but there is a provision to get PPP money as an independent contractor. The same rules would would apply in terms of whether or not you're qualified. All right. Hey Nick. All right, I'm getting a lot of them here. The banks don't seem to have any info on PPP yet. Yes, as I said, if I didn't, I'll say it again. So they think that this is going to be rolled out the mid January, but the guidance by the SBA and the IRS is sort of still spilling out. So some of what I even told you could possibly change, but I think principally the structure is there, and so the banks will have ideally all this information. Do you remember, if anyone was listening, do you remember how much anticipation there was the first time around when we were going for this? It was nuts, and it was almost like we were like a gold rush. We were all trying to get there as quick as we can. Hopefully this time around, it doesn't seem like it will run out. I think because they've tightened the qualifications of who's entitled to it. But I would apply as soon as you hear that it's available, and I would talk to your lenders if you have one from last time, and just stay in touch with them and just sort of get a pulse of when your specific bank is you think will be open for business for these loans. All right, if I added two stylists in time, so the question is, if I added staff, I assume the PPP amount this time around would be based on payroll expenses based on the number of my original PPP loans. So, okay. So basically, if you added staff, let me think through how this would work. All right, actually, here's how it would work. So the 2.5 months, that they're going to use to calculate the amount of the 2.5 months of payroll and related expenses that they're going to use to calculate how much you're entitled to, you can elect any 12-month period from the start of the loan date back to the latest you could use is all of 2019. So for a salon that actually has higher payroll and related costs, say January 15th of this year to January 15th of 2020, you would actually maybe use that time period. So that's how you might be able to account for adding staff. All right. Is there a time threshold as to when the banks have to give you an answer after you submit your application for forgiveness? Brian, it's a good question. I don't know the answer to that, but my experience last time around was it didn't take that long, and our banker was basically saying, just keeping us abreast of what was going on. I suspect that based on the amount of money they put into it, how much money was taken last time, and knowing how many businesses that took money last time probably weren't forced to shut down or didn't see the business decline by 25%, I think that this amount of money will be sufficient. So I don't think I don't want to create pandemonium, but I'd still be, as close to the front of the line as I could be. I mean, why take the risk? But I think that applications are going to go pretty fast. I mean, last time I think it was like a week at the most. All right. Any other questions? If not, I think we could wrap this up. I don't know that I had great answers for everyone. Again, this is kind of a fluid situation, but I think that it's exciting and certainly needed for a lot of you, for our industry, and hopefully this will make a meaningful difference. So with that, I'd say cheers and Happy New Year.